Leaked Nio Stock news. Elon Musk disclosed Nio partnership. What has been leaked about Nio Stock? What has Elon Musk disclosed about the Nio partnership? If you are a Nio stockholder, then this video is a must-watch for you, and if you are planning to buy Nio stock, then you should definitely check out our channel. So, welcome to Stock Market News, you all. We are back with another interesting video. Today, we are going to talk about the leaked news of Nio Stock and Elon Musk's partnership with Nio. So without any further ado, let's get into the video right away. On Monday, Hong Kong's Nio shares rose 5.4%, while the U.S. markets were closed for Memorial Day. The news that the Chinese EV leader may be the first Chinese automaker to begin selling units in the U.S. market is boosting the share price of the company. When it comes time to produce vehicles for the U.S. market, another Chinese EV startup, Polestar, will use Volvo's facilities, but that expansion hasn't yet begun. According to Chinese media, Nio is currently hiring manufacturing workers in the United States and has been linked to a property in San Jose, California. On Monday, the stock reached a high of 132.5 Hong Kong dollars. The Chinese EV manufacturer stock has risen nearly 5% since Monday, capping off a good week for the New York Stock Exchange Nio investors. Nio shares rose 3.37% on Friday, bringing the week's trading total to $16.57. After a 7-week losing streak, the U.S. markets posted their third consecutive positive session. For the broader markets, it was the best week since November 2020. The Dow Jones climbed 575 basis points, the S&P 500 gained 2.47%, and the Nasdaq gained 3.33% on Friday. The market's recent run of positive days has shown just how rapidly investor sentiment can shift. Tesla rebounded this week, regaining over 16% of its losses during the last 5 trading days. As of this video, a longtime Tesla fanatic from Credit Suisse has reaffirmed his belief in the company's stock value. For Dan Levy, seeing Tesla's Fremont Gigafactory was enough to maintain his overrate rating on the company and set a price objective of $1,125 for the next year. China's electric vehicle company, Nio, is in talks with a number of other automotive companies. One of the company's most senior executives spoke about licensing the battery swapping technologies that are at the heart of the group effort to win over petrol driving motorists utilized in Europe. Chinese and international automakers are in talks with the company to open its network of charging stations, which the company expects to grow from 800 to 5,000 internationally by the middle of the decade, according to European President Hui Zhang. Currently, it is focusing on Europe, one of the world's most competitive markets, as a proving ground for battery technology. Founded in 2018 and having sold 180,000 electric models in China, the company plans to open 1,000 car swapping stations outside of China by 2025. In the Nio system, the battery is replaced through a hatch on the floor of the station by unscrewing the bottom of the car. For the demonstration of how much faster the system is than the fastest chargers, which deliver some charge immediately but take up to an hour to replenish an empty battery, Tesla's first European site in Norway, which is the region's leading electric car market due to its subsidies, is placed alongside Tesla's superchargers used. The business started making deliveries in Norway in September. It will debut in Germany, the Netherlands, Sweden, and Denmark this year, and it is anticipated that it will debut in the United Kingdom, where it has a development base, later in the decade. The Nio's home market, which has a high urban density and a lack of driveways, has proven the viability of the battery technology that Tesla and other businesses have tested and abandoned. In order to interchange them at swap stations, where they are switched at a designated robot-controlled bay, car manufacturers who follow the system's requirements must use the same Nio battery. As each site requires a 650 megawatt dedicated grid connection, which is the equivalent of a small power station, the company has to address the issue of expanding its battery swap operation. There are 13 batteries at the station, and they must be able to fit into any car that arrives, so another automaker using new technology will have to create its vehicles using the company's platform, as well as the precise proportion and design of the company's battery, Zhang stated. In order to recuperate their investments in cutting-edge technologies, several automakers have sought partnerships. They believe this will give them an advantage in the electric vehicle market. Renault's Alpine sports vehicle shares a new electrical technology with Lotus, while Volkswagen licenses its electric car production method to Ford. According to Nio, by removing the battery, which accounts for more than a third of the initial price of a vehicle, battery switching will cut the cost of accessing electric vehicles. Currently, the value of electric automobiles is being eroded by the lack of certainty about the health of the battery. Nio anticipates that buyers will be able to afford cars at a lower price point after 3 years as a result of the battery being removed from the vehicle's price. To add insult to injury, the corporation refuses to reveal how much each switch station costs or if it ends up losing money. There are no extra profits to be made from the concept, Zhang said, and it's not about Nio needing to make extra money off of it. Nio stock has struggled this year due to external economic problems and production issues after a great year in 2013. Shares of the electric vehicle company Nio are down 41% so far this year. The news that Toyota and others are gradually resuming manufacturing in China after a temporary shutdown boosted new stock this week. Production at Tesla's Shanghai plant restarted on Monday after a 3-week layoff, the company announced. Volkswagen, too, has resumed manufacturing. COVID-19 related disclosures and other factors have contributed to a steep drop in the company's stock price over the past year, and the move is a breath of fresh air for new and other Chinese EV companies struggling with production schedules. In addition to Tesla, Volkswagen, and Li Automobile, these are just a few of their competitors. Due to a lack of semiconductor chips, Nio had to reduce its delivery estimates last year. Until 2022, chip shortages are expected to continue. JP Morgan's analyst told CNBC that global semiconductor output would continue to suffer this year, but that technological breakthroughs and increasing supply could lead to an improvement in the situation. Despite the increased demand, the timetables for all deliveries are still unknown. JP Morgan expects things to improve in the second half of the year. In comparison to other Chinese EV startups, Nio is underperforming, which is depressing investor confidence. So, is Nio stock a buy? Electric firms suffered significant decreases in stock prices, making them very interesting and less expensive investments. However, it is critical to choose intelligently in this arena because picking a dud might result in significant losses. Consider Workhorse, a manufacturer of electric pickup trucks in the United States. The company is currently recuperating from a U.S. Postal Service contract worth more than $6 billion, but in Nio's instance, numerous factors are working in its favor, making it a long-term investment. During the last 6 months, Nio share prices declined significantly. The stock has lost more than 60% of its value over this period. For now, Nio stock, which is selling at $14.63, is a good investment. There was a new all-time low price for Nio stock earlier this month when the price fell to $11.67 a share. The stock has already risen 25.3% since its low point in the market. This is a great time to get in on the action because the stock appears to be at a low point. The electric vehicle manufacturer Firstly will be introducing 3 new models based on its Nio Technology Platform 2.0 during the course of this year, bringing the total number of models it has made available to the public to 6. Furthermore, the company is expanding at a healthy rate. Nio delivered 91,421 vehicles in 2021. It was a remarkable growth of 109.1% over the previous year, and Nio is growing more profitable. So it's hardly surprising that gross margins have surged in recent years. As production ramps up in China, all indications point to Nio stock returning before the end of the year. So, this was all about this video. I hope you liked the information given in the video, and if you have anything on your mind, feel free to comment below. Also, don't forget to like, share, and subscribe to get more videos like this, and also hit the bell icon to get the notification of the latest updates on the channel. Thanks for watching!